My name is Andrew Stotts, and I want to welcome you to the Valuation Masterclass Bootcamp presentation. Today, we're going to have a presentation about the company Fastenal. Have you heard of it? It's a very interesting company in the US, and our students have been working very hard for the last 6 weeks on this. So let me bring in and introduce, first of all, our first student. So our first student is Rom Rawin, or we know her as Ellie. And for those of you that want to build a competitive advantage in the area of valuation, make sure to scan the QR code and get the discounts. We start the next boot camp in 68 days. So we'll see you there. Now, let's bring Ellie in. Ellie, are you ready to rock and roll?
Yes, I'm ready right now.
Good. I'm excited for you. And let's before we get started, we got some messages here. Lee says, good luck. Momin says, let's go. Pitt says, bye. And Uday Veer says, so excited. There's Hillary from Nigeria. Hello, everybody. And we got Harshil saying, so excited. And Madura says, finally, you're there. All right. And Pantakan says, let's go. All right. So we got everybody on. Now, what I want to encourage everybody is to ask questions as we go through this presentation, because at the end of the presentation, then we're going to take those questions. I'm going to ask them on your behalf and go through it. So now let me get the screen up here, and I'm going to bring up the presentation. So now this presentation is on the screen. Let me just see if I can put that into full screen. Okay. And I am going to leave in just a minute. So are you ready to go?
Yes, I'm ready right now.
Okay, so I'm going to leave now, and then you just take it away once I leave. I'm leaving now.
Okay, so hi everyone. Today I'm going to talk is about Fastenal company. So the first one that I'm going to talk is, so I initiate the coverage of Fastenal company with the buy recommendation based on the target price of 53.2 US dollar, implying an upside of 11%. So I derive my target price from FCFF based valuation using a WACC of 6.8% and terminal growth rate of 3%. So the highlight that we're going to talk about today is Fastenal build momentum with new sites and smarter operation. Fastenal grows stronger with scale and customer loyalty. And the last one is reshoring and pricing action drive Fastenal opportunity. Okay, so let's talk about the story. The story that we're gonna talk is Fastenal build momentum with new sites and smarter operation. Fastenal sales could go by 12% in 2026. According market bids, Fastenal may add additional 400 new on-site locations in 2025, an increase of 20% compared to existing location, which may increase a lot of revenue from these new locations as sign mature in 2026. So all this scale-driven model not only support the potential consistent sales expansion, but also protect margin through operational efficiency. So the Fastenal grows stronger with scale and customer loyalty. By 2026, on-site location are expected to surpass 2,000, securing sticky customer relationship and potential recurring revenue above $9 billion US. Commit customer base expansion already up 11% year over year into quarter 2025. So while the industrial sector cyclical, Fastenal has consistently turned downturn into opportunity by leveraging long-term contracts, pricing flexibility, and a resilient supply chain. So I foresee Fastenal breaking to the 10 billion US dollar revenue milestone by 2027, extending its leadership as the fastest grower and most profitable MRO distributor. So the last one that I'm going to talk is reshoring and pricing action drive personal opportunity. So the US realization is a major opportunity for Fastenal over the next 3 to 5 years, with 93% of 1,400 senior executive surveyed by the cabinet and planning to increase U.S. investment. So this trend is projected to sustain Fastenal sales growth at around 8.5% above its 7% average. So the company plans to implement potential pricing action of 5 to 8% late 2025. So I believe these factors together is an opportunity to create a unique setup where Fastenal can capture both volume growth from reshoring and margin expansion from pricing. So the next one is capital goods industry set for the robust. Okay, the first one that I'm gonna talk is General Electric lead with 5% share of market caps, followed by IHC, and also major public investment and 18% year-over-year growth in private capex, drive local manufacturing and boost demand for capital goods. As a result, I foresee the long-term resilience and mid-single-digit growth over the next 4 years for the industry, followed by infrastructure, spending, energy transition, and domestic production. So the process optimization are expected to value industrial automation from $210 billion in 2024 to 335 US dollar by 2025. 2029. So with the 190 196 billion US dollar in M&A targeting energy efficient tech by 2025. I project that AI driving efficiencies and sustainable tech at 2% to overall 5%. So the next one that I'm gonna talk is the revenue. Total revenue increased at 8.6 year over year to 2 billion US dollar. Gross margin increased to 45.3% from 45.1% in quarter two in 2024. Operating margin was 21, up from 20.2 in two quarter 2024. So the last test knew that we better serve smaller customer spot buying needs and reached a new 52 weeks high of 49.94 during midday trading on August 2020 to 25, closing at 49.90 with high trading volume. And the last one, the new target range to 25,000 to 26,000 machine equivalent units and decrease from the previously. So the next one that I'm gonna talk, over 86% of analysts have a neutral stand on Fastenal company with 11 out of 16 recommend a hold rating. The consensus target price indicate a 14.3% downside from the current market price. Forecasts show accelerating revenue growth, rising from just 2.7% in 2024 to 9.2% in 2026, before slightly easing to 7.0% in 2027. So this is the sale. So the Fastenal steady growth with expanded margin range. Revenue has grown steadily, surpassing 7 billion US dollar in 2026, reached cost $9 billion by 2027. Highlight the company ability to capture long-term demand despite cyclical market pressure. At the same time, net margin have held firm around like 15% and are forecast to expand gradually toward 16% by 2027. This is the FVMR. So that you can see the margin remain high at 20% and ROE above 30%, showing efficient operation. And the momentum growth has slowed with weaker earning and softer recent price performance. And WCB, so the Fastenal has consistently ranked at the number one in profitable growth over the past year. So as you can see this one, the revenue was growth from 20 and 24, like 500 because, and the next one is 20 and 26 because uh, they use the money for like doing the building for the next day. Okay. So, and this one, as you can see that the cash and short-term investment, they slower and decrease from 256 to 205. Okay, so this one is depreciation and amortization. As you can see that this is up from 351 to 394 because they have something that they have to use the money. So the next one that I'm gonna talk, the Fastenal trades at an attractive valuation relative to peer when looking at PB to ROE for 2025. The company PB ratio is expected to compress significantly from 12.0 in 2024 to 7.0x in 2025, reflecting improvement earning power. So looking forward, ROE is expected to remain robust at nearly 40% by 2026. So on the forward 2025 PE multiplied, Fastener appears to be trading slightly above the world average of 22.7 with a PE ratio of 23.2. It is also much higher than Asia X Japan at 15.5%. So through still below the US market at 27.7. The suggest Fastenal is valued at a premium compared to most peers. However, when we're looking at its PEG ratio of 9.2 in 2025. So this one I assume that a risk-free rate of 2%, market equity risk premium of 6.5%, beta of 0.8. This result in a cost of equity of 7.2%. So giving an after-tax cost of debt of 2.3% and a weighted average cost of capital of 6.8% using different valuation approach. So the highest value of 61 US dollar share, while the FCFF and FCFE method suggest 55 US dollar share and 52 US dollar share respectively compared to the current market price of 48 US dollar. These imply an upside potential of about 11% under the FCFF method. This indicates the fastener is undervalued relative to its intrinsic worth. So the optimistic case assumes a gross margin of 48.4%. Target price is 55.7 US dollar. So this is one that you can see. What if the gross margin change by percentage? You can see that the net margin is 17.5 and the ROE is 38.6. And let's move to the DDM. DDM is 66.6. That you can see this very high. So the last one is risk. The challenge that could pressure Fastenal business model. So, however, such rapid expansion carry execution risk delay in construction slower than expect customer onboarding or underutilized sites could reduce the project 12% sale growth in 2026, more than 18% of Fastenal revenue and generate in US. Any slowdown in manufacturing recover construction demand or border industrial activity could weigh directly on growth. Fastenal has shown resilience in past cycle by revelating contract and sticky customer relationship. And the last one, management explain management expect pricing action to add 5 to 8% uplift in late 2025. However, there is a risk that competitive distributor or e-commerce platform respond aggressively with lower price, reducing Fastenal ability to fully capture this benefit. So that's it for my presentation.
Okay, we got some questions. So the first one is, First question is from Tanawat. Why does revenue get such a boost in 2026 rather than 2025? We can see right in this table here, a recurring net profit growth, 42.6%. Talk to us about why you think 2026 is going to be such a great revenue year.
Okay, thank you for the question. So as you can see that our recommendation is a buy, yes. And in 2025, this year, we're gonna buy and more like we have to do like more new location for the next year that will with growth like like that.
And one of the questions from Moment is, why don't you think this is the stock's peak? For instance, some people are negative on it, right? And you showed the consensus, which I would say is kind of neutral with a little bit of downside. What's the catalyst, or what is the one thing that makes you more positive than negative?
Because we use the cash flow to do the building for the next year. Because we like to make a new location for that. So our ratio is going up more than the other one.
So the other question is about the impact of a potential slowdown in the economy and the impact of reshoring and that type of thing. What is your so one of the questions comes from Pitch, which says, from Chairman Powell's speech, I think the economic outlook is possibly going to slow down. Do you think that your growth forecast is too aggressive, or do you think it will be offset, or what are your thoughts on that?
Can I repeat the question again, please?
Yeah. So let's just say people are thinking that the U.S. economy could be slowing down. What are your thoughts on that? And if the U.S. economy slows down,
Okay, for my opinions, they could go slow down, but they could go faster too because we use the cash flow. Like I said, that we're gonna make a new location for the Fastenal, so the customer can relationship with us like more than. So it could go faster too. Like the name of the company is Fastenal, right?
Okay. So we like its name. It's going to grow fast.
Yeah.
Okay. Let's see. Moment says, with your low weighted average cost of capital, what could change your recommendation to sell?
As you can see right now, the WACC is not growth like the name of the company, right? But we can do it more. We can do it more growth from, as you can see, the low WACC too.
Let me just look at a couple of others. Hold on. So what's your main driver for free cash flow to the firm that could, cause it to be, having strong growth? What is it that you think is the number one thing that's impacting the growth of Fastenal? Like, you've presented that their growth has accelerated, so far in 2025. What do you think is the main driver of growth?
The main driver, as I said, the last question is about cash flow, not right. Now as you can see, the cash flow of the Fastenal company have some cash flow, right? So we use that cash flow to make the new location for we have a relationship with the customer more than this. So the growth ratio will grow up by the using, right?
And another question is, compared to competitors like Grainger or Home Depot Pro, what do you think is Fastenal's sustainable advantage?
Sustainable of sustainable for Fastenal is how they make the relationship with customer, and yeah, that's what I think right now.
Okay. So how does it feel to complete this presentation?
Oh my god, I'm so nervous right now, but now I'm very glad that I'm on the presentation.
And how would you describe the transformation you've been through so far in the first 6 weeks of the Valuation Masterclass Bootcamp?
I'm not gonna lie. And the first week that I'm learning with you, oh my god, I'm so bad at doing the report and searching something. But when I learn and I transform to be me today, I'm so really glad, and I hope you guys invite your friends to learn this course so much.
Yay. Okay, well, congratulations, and that's it for this one. And then we're going to have a little fun party of all the students, so that's going to be great. So I'm going to see you in that. Well done.
Thank you very much.
All right. So there you go. Remember that Ellie's never written any research on a company before to this professional level. So she's really come from zero to this point. So if you want to build a competitive advantage in company valuation, join us in the Valuation Masterclass Bootcamp. In fact, just scan that QR code and you'll get a discount of $1,900 now. That lasts for 7 days. So check it out now. The next bootcamp starts in 68 days, and I hope to see you there. This is Andrew Stotts signing out, and I hope you have a great